So Arun Chandavarkar joins us now, CEO and Joint Managing Director with Biocon. Arun, can you walk us through the approval of the formulation business in China and what is the upside for this, and is this your first entry into China?
Yeah, hi, good morning. What we have recently announced is a partnership with one of the leading Chinese companies, CMS, which is the China Medical System Holdings Company, to basically take forward our generic formulations to the Chinese market. We'd like to take advantage of the opening up of the Chinese market in terms of many of the initiatives that the Chinese government has rolled out, where they have benchmarked the quality standards to international quality standards. And since as a company, we have always developed our products to international regulatory standards, we believe we can leverage this opportunity to take our products through the registration process in China relatively quickly. Historically, as you know, Biocon has always been a very strong API company focused on, complex and differentiated APIs, which we are already, supplying to customers globally. But we entered the formulation market couple of years ago with the intent to now capture a larger part of the value chain. And whilst the focus initially was the US and European markets, we believe that with China opening up, and being the second largest market in the world, this is an opportunity that we should now actively pursue as well.
Okay, fair enough. So that's about China and the market as well. In terms of margins, and volumes, could this possibly be also a growth driver for the generic formulation business, which has been struggling for a while when you're looking at a lucrative market like China? How does it stack up, vis-a-vis the US, for example, in terms of margins, volumes, expectations there?
Yeah, so if you look at our small molecule business, last year, if you look at FY19, our small molecule business on a year-on-year basis actually grew 18%. Even if you look at our Q1 performance, results we announced in July for Q1 of this year, our small molecule business grew a healthy 20%. So, these are reasonably healthy growth numbers for a small molecule business. Now, within the small molecule business, our generic formulation business has, of course, shown a multifold growth because it's coming off a lower base. And we expect this trend to continue going forward, where we will show a healthy growth in small molecules over the next few years. And opportunities like the Chinese market opening up in a couple of years for us, as well as the launches in the US market and other markets, will drive, both profitability growth as well as revenue growth in our small molecule business.
Right. Arun, does China formulation market have a lot of entry barrier, and do you think it will not be easy for large pharma companies to get into China easily, or is that not really an issue?
Well, as I mentioned in my opening comment, the Chinese government has actually undertaken a lot of changes in their healthcare market, both in terms of aligning a lot of the quality standards to global benchmarks. They've introduced the generic quality consistency evaluation system in 2015, where, for generic products which are deemed equivalent to the innovator products, they could enjoy a preferential treatment in public procurement. So these are opportunities that, have happened over the changes that have happened over the last 3 years or so in China. And companies like ours do intend to leverage the opening up of the Chinese market to high-quality generics. And we do see China as a strong growth driver. After all, it is the second largest pharmaceutical market, next only to the US.
Okay, Arun, really appreciate your time. Thank you for joining us.